Hi everyone, it's Paul Seabridge here. So in this video, I'm going to explain how we present an offer to a business owner. So when we want to acquire a business, we make a formal offer. I'm going to explain how we do this. So first, before I get started, let me introduce myself. I'm Paul Seabridge. I'm a global entrepreneur, #1 best-selling author on Amazon, CEO and founder of Opulentia Capital, a private equity mergers and acquisitions firm that's transacted on almost $1/3 billion worth of deals, spreading 100 transactions in 11 countries across 29 industries. You can learn more about what we do at www.buybuildsell.net. So I'm just going to share my screen and share with you the offer presentation that we do at Opulentia Capital. So this is a slide deck that we go through with a business owner. So typically this is done on a Zoom call where we share the screen and we go through it with them. It can also be done in person. But really the purpose of this presentation is to do a few things. Number one, it's really a structured professional presentation when they're selling probably their biggest asset, i.e. their business. They want to understand obviously the financial components of the deal, which we get to, but also more about us as a buyer, what we do, and what we're going to do with the business and what our plans for it are moving forward. So the objectives really of the presentation is to convince them that, you know, we're going to look after their legacy, we're going to protect it, we're going to build their business, and we're going to obviously explain to them what they get out of the deal in terms of the financial components. So the agenda is, so I'm going to now sort of talk about how I'd actually present this to a business owner. So I imagine I'm talking to a business owner. So today we're going to run through a proposal to acquire, name of the company. I'm going to cover our experience, the process that we're going to go through, both in terms of the pre-acquisition process, post-acquisition handover and succession planning, and the timescale to all of that. We'll talk through the legal and deal structure. We'll talk through the focus. We'll talk through then the financial components of the proposal, and then we'll talk about the real estate side of the transaction. So the real estate is only applicable if there's a property involved and we're going to use that in some way, shape or form as part of the deal structure, then obviously we would have that on the agenda. But clearly if there was no real estate proposal, then clearly that wouldn't be relevant. So firstly, our experience. Opulentia has done 90+ transactions over the last 12 years, covering 26 industries and 9 countries. Clearly, this slide is slightly out of date because we've done a few more deals since then. And if we've been involved in their specific industry, then we'll actually mention that industry and or maybe the company name that we've been involved in. The experience of the team. So I'll explain who I am. I'll then introduce the other people, both at Opulentia and then also post deal, the operational team, Simon Martin, CFO, Peter Lawrence is HR director. Then go through the process. So the process that we follow is, firstly, we'll agree a term sheet. I call the term sheet a roadmap to getting the deal done. So it's a basic document that covers the key components of the deal. We'll draw that up and then we hand that over to the lawyers. We then issue a due diligence checklist, which is basically covering the legal, commercial and financial aspects of the company. So basically we'll set up a virtual data room. They can upload documents. We don't need to visit the business. We can review all of that remotely and come back with any questions or queries. We'll then do some very detailed financial modelling because we want to make sure that the deal is viable for all concerned. We then work through a legal process. So the lawyers draw up all the contracts. Whilst we're doing all of that, we're running funding concurrently. So we're going to borrow money to make this deal happen. We'll be going through that whole funding process, talking to lenders to get that in place. And then we'll move towards a completion. Timescale is more dependent on them and how quick they will go through a process. Generally, that tends to be a sort of 3 to 4 month process from signing the term sheet to a completion to work through all of those key milestones. In terms of the process, obviously, once we've done the deal, there'll be a communications plan with staff, key stakeholders, so customers, suppliers, funders, landlords. Day one is really about that communication, and it's really a message of reassurance. Just because there's been a change of ownership, it's still business as usual. The business owner is still involved in the day-to-day running of the company, and it's really then about getting into those relationships with customers, suppliers and other key stakeholders. During the first 30 days, it's really us trying to understand how the business operates in quite some level of detail. And then a handover period typically tends to take 6 to 12 months, where during that period of time, at the beginning, it can be very full on and they'll continue to run the business day to day. But as time ticks on, the reliance on them will become less and less as we start to learn the business. We've got more into those relationships and we've protected that goodwill. We've obviously identified a successor. And for further information on this, they can actually visit the Opulentia website, where they can actually hear live interviews with sellers and staff and JV partners that we've worked with that say positive things about that. Then talk about the legal structure. So we always use an SPV. SPV stands for Special Purpose Vehicle. It's effectively a local-based legal private limited company, and that then becomes the owner of the shares of the target business. And the reason we use an SPV is to keep it separate from everything else, and it protects assets right across the board, protects them and protects us. So our focus on acquiring the business will then be about really protecting the staff. So it's not about firing anybody, it's about building, empowering people, giving them the tools and resources to hopefully grow the business. And that's all designed to protect the legacy, the brand, the reputation of the company. Yeah, we can then go on an acquisition journey and build the group further. Mention the testimonials, they're available on the website. Here's some people that we've worked with before that have sort of been in their position in some respects, so they can review those. Myself, I'm a #1 best-selling author on Amazon, and if you haven't read my book, I'm happy to send you a free copy, but it basically will give you an overview of the sort of last 23 years of my career, businesses we've been involved in, things we've learned along the way, and probably will give you an idea as to our style in terms of what we do. But really, we're entrepreneurs at heart. Yes, we're investors and we want to get a return on our investment, but we see things through the eyes of the business owner and the challenges that the businesses may have. And the book outlines how we sort of tackle those. So in terms of the deal structure, I'll just explain here that in the UK, it's not uncommon for businesses to acquire lots of surplus cash over the years. Maybe the business owner has owned the business for 30 years and they've taken out reasonable dividends to support their lifestyle, but maybe the business is making more profits than the business owner actually needs to take out. So what they might do is leave some cash in there every year, and over many years that could accumulate to quite a substantial sum. If we structure the deal in the right way, they could take that surplus cash as consideration, which means that they'll only pay capital gains tax on that cash rather than any income tax or dividend tax. So we're not going to get into the discussions of all of that in this particular video. But if surplus cash is used, then we'll explain all of that. We then borrow money against the target business. So we're basically going to inject new debt into the balance sheet. It's secured against the assets of the business. And then the balance is then on a deferred basis, so effectively also known as seller financing. If there was an earnout applicable to this particular offer, then we'd explain there's an earnout and what that means. And if we're going to adjust the consideration based on the completion accounts, then again, we'd explain that here as well. So the way that works is that, we might base a deal on the profits and the balance sheet of the company at a particular point in time. But, when we tie up the deal to actually when we complete, maybe in 3 or 4 months' time, the balance sheet could grow further. Now, we might choose in negotiations to negotiate with the business owner to pay out the difference between what we've based the deal on, and if that grows, then we would pay out an additional amount. So if that's relevant, we'd explain it here, but again, it's part of negotiation, so wouldn't necessarily be in every single presentation. And then from a tax perspective, tax is tax, but we'll always work with their professional advisors to try and structure the deal in the most tax efficient way possible. In terms of making our financial proposal, we've used some assumptions and metrics, and this is the slide where we'll explain what those are. So we'll explain to them that we've taken a 3-year average EBITDA. In this example, it's 552 grand. And if there's any normalizations to EBIT, so for example, if there's directors' remuneration, pension costs, wage subsidies, whatever, to inflate that profit, then we can adjust accordingly. Same with the balance sheet as well. And if there is a director's loan outstanding, we could gross that up as part of the consideration, which is a tax-friendly way of doing things. So in this example, we've just put a fictional figure there, but yeah, the overall purchase price we present, which is in this example 3.652 million, plus an earn-out structure. And in terms of then how that's funded, the initial consideration is 1.38 million payable on completion. Deferred consideration is 2.5 payable over 4 years in installments. The earnout, if there was one, we would explain what that is. Usually that tends to be a percentage of any uplift in EBITDA achieved over a period of time if the business owner is still going to be involved in the business. And based on the EBITDA that the business is being valued on, this represents a 6.64 times multiple. If there was real estate, we'd obviously explain it here. In this particular example, the company owns the real estate, and what we've agreed is that the business owner is going to retain that real estate. So we would explain how we would structure that, how they end up obtaining the real estate and any tax consequences from it. And we would agree at this point, what we would think a fair market rate would be to rent the premises back in a sort of sale and lease back type arrangement. And we then leave it to, have you got any questions, any next steps? And I would probably at this point invite any initial feedback that they may have. So they might not necessarily say yes or no at this particular point, but it means that we can get maybe a bit of an idea as to what they're thinking, and if they've got any objections, we can have a crack at trying to overcome them. So there we have it. That's how we present offers at Opulentia. I say it's a structured presentation, really selling yourself as a buyer, what you're going to do with the business, providing reassurance about growing their legacy, as well as the financial components, and explaining the deal structure. So does that all sound a little bit complex and scary? Well, we help entrepreneurs buy multi-million-pound business within 18 months guaranteed, and I have a whole team here at Opulentia Capital that can do all of this for you, including making these sorts of offer presentations to deals that you might source. So I'd love to hear your comments on this in the comment section below, and if you've liked this video, please click the like button and subscribe to my channel. If you haven't watched the video on www.buybuildsell.net about how I and my team help people buy multi-million-pound businesses within 18 months, then please do head over to the website, as I say, www.buybuildsell.net. So that's it for this video. Thank you for watching.